I'm Danny LeBeau. Welcome back to the Fourth Revolution. We'll talk about stocks for your portfolio of the future. Those stocks of the future, like I've said, have come down into this discounted range, and a number of these new freshman innovators in this public market have come down to valuations that are hard to ignore, and there's become this Goldilocks valuation zone that stocks have come into. Is the Goldilocks valuation for an acquisition. And these cash-rich mega cap tech stocks have come into a windfall of cash during the pandemic, when it's digitally impacted influence on the U.S. economy and the world economy as a whole. So these newly cash-rich mega tech companies, sorry, a little tongue twister there, are looking for ways to profitably deploy this capital. And a lot of them are buying up huge sums of stock, buying back their own stock before Biden increases the taxes on this type of capital deployment. But they're also looking at these innovators, like I said, have been recently hugely discounted into the territory that I like to call the Goldilocks valuation, which is going to be a company with huge growth outlay coming into this fourth industrial revolution, a valuation between $5 and $30 billion, and a P to S, a forward price to sales of less than 10x, which doesn't seem like a very high bar to set, but a lot of these companies are looking at growth of 50% or more in the coming years, and it's hard to ignore once these stocks are over 50% off their all-time highs. So these mega cap tech companies are coming in, and they're coming in with cash, and we saw it with Splunk yesterday. So Cisco came out and said that they're looking to buy Splunk, a company that is nearly 50% off its all-time highs, which it hit last, I think it was September of 2020. And they're looking to buy it for about $20+ billion. Cisco's looking to buy Splunk. Splunk is a real-time data management company. It has a focus on cybersecurity at the moment, but their capabilities are way beyond that. And they've showed that in their latest investor day with AI and Internet of Things connecting everybody. And their platform for real-time data management is going to be best in class for whether it's IT workflow, supply chain bottlenecks, or what have you. It's going to be the best actionable platform for that type of technology. And there's a number of other companies out there that are sitting in this Goldilocks zone and look poised for not only a long-term investment, but potentially a short-term increase if they are looked at by some of these mega cap tech companies. So let's take a look at some of the recent acquisitions and take a look at some opportunities potentially for a big tech pickup. As you can see, there's been a slew of M&A activity, with deal making hitting an all-time high in 2021, and this is expected to flow into 2022, at least the first 6 months of it. And these high-tech growth companies are really sitting at a discount. You can see people are taking advantage. Citrix is being taken private by a private equity company. Activision Blizzard being bought up by Microsoft in its biggest acquisition ever. And this is kind of a play on the metaverse and this new age of gaming that we are entering. Similar thing with Zynga being bought out for nearly $13 billion this year. And then this is kind of an overflow, like I said, from last year, and this is not slowing down, with Splunk being the latest thing in big tech sites. I think that we have a number of other M&A potential opportunities coming in the months ahead. So let's take a look at some of the stocks I'm looking at for not only long-term acquisition opportunities, but their potential in this market is being boundless at the discounted valuations they've come to from the January pullback. First stock I'm going to look at here is HubSpot, ticker HUBS. It's on TradingView.com. You can see the stock has just capitulated since its highs back in the beginning of December. We've fallen all the way down to less than half of its valuation back here at its highs, but we've recovered quite a bit. If you see, let's see about how much have we recovered. Yeah, about over 25% from these lows. We had a really strong earnings report earlier this month that showed, kind of confirmed the profitable secular growth outlay that this stock has, but we've had some technical difficulties getting above this 50-day moving average right here. The stock is trading at a $25 billion valuation. It's a little bit above my Goldilocks P to S at about 14 times, but I think that analysts are underestimating the top line potential of this company, projecting 30%, I believe, top line growth in 2022, and I think that the company can more than outdo that with beats across the board in its latest earnings. And I think this stock is ripe for a buy right now. This technical resistance level we're seeing is going to be broken soon. It's just a matter of time before the fundamentals come back into play. And, analysts are bullish, more bullish than ever on this stock today. Next stock I'm going to look at is Upstart. And this has been under an enormous amount of pressure. It's one of those high flyers that caught the Wall Street Bets bid back in 2021. You can see we are about fractions of what we were trading at the highs, a fourth, I believe, right here, from the 401 approximate high down to $75 a share in January. But we are on the uptrend. This company reports their earnings after the bell tonight, which is Tuesday evening, and I expect this to be a spring-loaded event here with the stock really compressed. You can see this looks like a coiled stock right here under the under both its 50-day and 200-day moving average. But like I said, I'm expecting some big upside price action. And this stock, it's a partner with banks, so I would not be surprised if it's picked up by one of the big banks. It's one of the leading credit worthiness assessors in the market today, saying that it is 10x is good as the best big banks algorithm as far as assessing consumer credit worthiness. And as interest rates rise, these banks are looking for more ways to lend, and Upstart is the perfect way to do that. So this is a stock that I think is really undervalued going into this new normal. Final stock I'm going to look at is Alight, and this stock has been under the radar for the most part because its SPAC debut that's kind of held a taboo in this market. Any company that's gone public via SPAC has had some significant pressure, and fundamentals haven't really begun playing into it until recently. And you can see the stock is kind of ripping higher off of these January lows, and it's targeting $20 a share. That's what most analyst price targets are. Its valuation is just south of $6 billion. This would be an easy pickup. It's an HR AI-driven cloud platform that is poised to explode, similar to Splunk. It's in that transitional phase to the cloud, but it has 70% of Fortune 100 companies under its belt already. It's just a matter of time before it monetizes on this transition, just like Splunk. All these potential acquirees for the next generation of digital advancement are not just good prospects for a short-term acquisition bump, but they are long-term plays that I am looking at to hold in my portfolio for this fourth industrial revolution that we are entering. So don't forget to check out Zacks.com/promo to get our latest promotion, and look forward to seeing you guys next time.